Are the real estate markets taking a huge step back, or are they going to be just fine? In today's episode, we're going to discuss all of that. To say the least, the economy has taken a beatdown in the past few months. Between war in Ukraine, successive 7% plus inflation reports, gas prices through the roof, the stock markets are now trading in bear market territory, and to make it all worse, the Federal Reserve has raised interest rates 3 different times in 3 months. Look, I didn't see a single expert back in January predicting that there would be a 3-time increase in the first half of 2022, but here we are. That equates to about 150 basis points, which means your interest rate is no less than 1.5% more expensive than it was at the beginning of the year. Ouch. What this all amounts to is your average interest rate right now lands you between 6 and 7%, which is incredible. Last time that happened was sometime in that 2005-06 range, and people are not seeing those prices back then. So it'll be very interesting to see how these record prices react to these interest rates. What's happening though is the government is rapidly overcorrecting what should have been done a year ago, and though I don't personally agree with the way they're handling it, overcorrections do not equal normal times. This will eventually become old news as things chill. But the result of all this is likely going to be a recession. Big question most people are asking right now is, how the heck does this affect housing? And I have a news flash for you. Housing is going to be just fine in most places, and here's why. Supply levels are still incredibly inadequate to meet today's demand. Look, millions of buyers wanted to purchase in the last 2 years, but we're continuously losing in these bidding wars, and they haven't gone anywhere. They still haven't bought a place. So right now, supply levels are still well below where this demand is, even if some of that has dropped off given the recession. You don't need Apple stock. You need a roof over your head. You still need a place to live, and people are out there looking for it. And number two, as medium to high income earners are growing out of their old spaces, look, they want more space and they're not willing to settle on that forever. They're not going to live in that crammed apartment. So they're going to be out there looking for properties as life grows and changes, and most people are still gainfully employed. So I see that demand really not going anywhere for the foreseeable future. And number three, there's creative ways that you can buy a property. Look, with the sky high interest rates, if you're a buyer, have the seller give you a 1% or 2% credit. Use that 1% or 2% credit to buy down your mortgage interest rate by that same 1 or 2%, which brings your 6% rate back down to 4% territory. And look, as we mentioned, this is not normal forever, just normal for now. And when those rates eventually do come back down, because if history's taught us anything, they will absolutely come back down if there is a recession, you get to refi. So purchase today with that confidence and refi later when given the opportunity. To all my sellers out there that are wondering, what should I do? Look, get in the game. That demand isn't going anywhere. If you have a nice property, you properly prepare everything, leaving nothing to chance. You stage it, you paint it, whatever needs to be done. There's a buyer that will likely pay you an unprecedented record price or darn close to it still in today's market. The demand has not gone anywhere, and no matter what happens over the coming months, I don't see that going down to the point that you as a seller have much to worry about. Be confident. Remember that the stock markets and the real estate markets have totally different functions, and right now we're going through a period of inflation which is really impacting stocks, but real estate has that utility factor that most things don't. So just keep in mind, real estate is likely going to be just fine over the next 6 or 12 months, no matter how goofy things might get.